It's Thursday. We had unemployment claims today. I'm going to go over today's moves on the S&P and the Nasdaq. I'm also going to have a look at what the Dow did. I didn't take any trades today, mainly because super busy at work today finally, and we've already got 2 wins on the week, 1 loss. Just didn't really feel like I needed to. And the price action today has been super choppy as well, especially after 2 massive moves in the last 2 days. You know, we look at the hourly, we had this massive push up, take all-time highs, and then drop off. Maybe not all-time highs on Nasdaq, but you see we had this massive push up yesterday, and then we just sold off overnight. London session took the previous daily low, and then we sold off again in the AM session. So another reason I didn't trade today was also because the correlation between the 2 markets wasn't ideal. Like you can see, Nasdaq's completely sold off, S&P's pushed up a bit after a short drop, and the Dow has just gone mental. So yeah, I did mark out a couple of trades, and also my model from yesterday's PM session video. So we're just going to take this out. Would have played out. So the previous daily high from yesterday was here. What do we have? We have 1 hour inverse fair value gap there. We have breaker structure here. From here, if we drop down onto the 15-minute, 1, 2, 3 candles. On the 5-minute, even it might be a bit better. Yep, so after the breaker structure, we got our fair value gap on the 5-minute. Like so. Price retraced up into this at the end of the PM session. And you could have gone short like so. $1.6 to 1 on the Nasdaq, or on the S&P it played out a lot nicer. So on a 15-minute we had was it the 30-minute? Yeah, it was a 30-minute inverse here. Just bump that down a little bit. Like that. Price did trade up into it. However, got our breaker structure here. The 15, it might be a bit clearer. So we're going to take this as the break. Not there. So we got that. From that breaker structure, we had a nice 5-minute fair value gap here. Go short there, stop just above the inverse, and trade the previous daily low for a 2.2 to 1, which would have got taken, you know, just at the end of the PM session, trade back up and then down again. So this fair value gap here is the 5-minute. This is the level that's acting at the moment. So that would have been yesterday's trade. And then today, you know, we come down below the previous daily low. Not a clear draw. We have is that an order block? I mean, we got an order block here, last down candle before multiple up candles up. Price trades down into that. Inverse fair value gap created. Like so. And then note, we get the breaker structure here. And then it was just a bit choppy, to be honest. Like, drew out the 8:15 or the 8 a.m. 15-minute candle, which is this one here. Price moved up. Did trade back down into it. My initial idea was to go short, just because although we have all of these imbalances here, price has already traded into this. And yeah, I just felt a bit more bearish today with this imbalance down here, although price didn't really need to go to that level because it already traded into it. And then I got a bit thrown off at the open, to be honest. I was just sort of, I went in, I didn't really have a clear plan, so I didn't take any trades. And as you can see, 9:30 Nasdaq just dropped like that, straight for London low. Whereas on the S&P it wasn't as much. We were sort of chopping about here. I was looking at the 1 minute. For a potential short, 5 pip stop, and then just target London low, which didn't happen, and instead price just came down onto this order block here, pushed back up, and would have stopped us out. So right decision not to trade today. And then the next trade that I marked out, if we just remove that for now, was we got this massive push up at 10 o'clock, and I think that's when the news came in. Oh no, the news came in at 9:30, but it was bullish news, like the employment claims had dropped. So the initial move down, I was thinking is more of like a shakeout, just take anyone out so we can pick up some more liquidity to go back up and target the Asia high. And then with this imbalance above, we can now see prices done so. And then the entry would have been this wick here, you know, come down, see on the 1 minute. And that is in line with this fair value gap here, past the break. We had an inverse fair value gap on the 3 minute. As you can see here, in line with the midpoint of the 8 o'clock 15-minute candle. And yeah, you could have taken multiple entries here, long, stop just below this 15-minute candle and this inverse fair value gap. So incorporating the previous daily low, previous daily high model with the 8:15 or the 8 o'clock 15-minute scalp method, and using clear draws on liquidity, but also exercising caution when your bias isn't clear and you don't have a clear plan. This could have been a nice winning day, 2-1. And as you can see, that literally would have hit in the last 5 minutes or so. So if we were to take this, what would I be looking at? Maybe like £130 stop. Not 110. So we're looking at like 25. Yeah, 25 units. 1.92% risk. Bang, 268. But like I say, I was very busy at work today, so I didn't really want to take a trade, especially after the wins earlier in the week. Just keep the profits for now. But nonetheless, it's nice to see that play out. And then on the Nasdaq, it's just not really recovered since. I was kind of looking for, like, we got this mini inverse fair value gap here on a 5 minute. And then price just traded up, and I believe just went to equilibrium and just continued down. So equilibrium of this news candle to the bottom of that range. Sorry, the original range. Where are we going? Just do that. So if we look on a 15-minute chart, that's one candle there. And even still, that's not actually the right range, so it wouldn't have made too much of a difference. But yeah, it was just a bit confusing today. Like, you could, the difference between the two markets, I wasn't really comfortable trading that. Like, we could still see opportunities, but are they in line with what I want to see? no, because I didn't know what I wanted to see, and that was my indicator not to trade today. And also as well with the Dow, we traded into this 5-minute fair value gap, which I mentioned the other day. This one here, tried that across, pretty much filled that at 9:30 and ripped upwards from there. Not sure if there was really a chance to get in if you were looking at that. I mean, 1, 2, 3 candles there, you could have done something like this. With the entry right on the fair value gap, stop below this, and then what could you target? Target the Asian high for 1.45 to 1, or you could target this imbalance for 2 to 1, or even further up this imbalance 3.5 to 1, and it may even possibly come back up to this high here. So you can see if we mark out the different highs, there's multiple different targets that we can look at from our entry down here. We've got one there. Let's put this in white. Like that. Asian high, PM high, high there. So yeah, overall, no trades today. I'll explain why, but there was still opportunity if you're willing to risk it, and I wasn't in the right mindset. I didn't have a plan, and hence my rationale for not getting in. Going into tomorrow, I'm probably not going to trade, although we are having a storm where I'm at the moment, so it's possible that I'll be working from home. And if that is the case, then I'll have a look, see what's going on. But unless price is clearly showing its hand, then I have no need to do anything else for the rest of the week. And we can end it in profit of, I think it's like 250 something for the week. Yeah, 256.96 on the week. Whoops. There you go. So that's our 3 trades, 2 partials there, 1 stop in the PM, and Monday's trade there. Lovely. With all that being said, I think that's going to be me for the day, and yeah, I'll catch you tomorrow.